The J22 report. I'm your host, Johnny Market. You all know that drill. Hit that like button and subscribe if you already haven't. And so today's video will be about gold and why gold stocks probably haven't outperformed. I did some videos on this, and everyone says it's the stock market, but I do think there is some truth to it. But if you look at unemployment rate, and this is the best chart I can get. If there's a better chart, let me know that I don't have to pay for. I have the gold price memorized, so I don't need a gold to, as that's been my life for basically since 2009. So anyway, around 2018-19, gold was at 1100. Not all that great. And then it finally made a move to 2000. But look at the unemployment rate. Went from 3.5 to 14%. And that was really the real top of the bull that run. And then that was the top, and then it started coming back down. And you can see the unemployment rate, for whatever reason, started coming down. Then it made another quick spike, and I think that was just in 2022 back to testing the high. But I think that was because of the invasion solely. Geopolitical tensions do not last long. And if you look at it, gold came back down from 2000 around 1600. In 2023, they were talking about Goldilocks and soft landing and all this other stuff. And as you can tell, the gold price was not doing well in 2023. And right now, this unemployment rate, October, this was around the bottom. And unemployment rate was at 3.8%. And if you look at it, what happened is the unemployment rate in March 3.8, 3.9, 4. It started creeping up, and now it's at 4.2%. And even though it's not much, what else started creeping up is I wish there was a CPI chart, but I still remember CPI started creeping. No, maybe it didn't. Oh, it did have that one swing. It was at 3, went to 3.7%. And that's when gold started going up. So as you can tell, I went to. But here's the thing. Everyone talks about the stocks not doing well. And I did a video with, I would say, how long ago? I did a video a couple of days ago. Just say that. And if you look at it, I'm just going to go over a couple of the main royalty and streaming companies. And we'll just get rid of this. Or should we just go away? All right, good. It went away. And if you look at it here, 2015 was the low. And this wheat and precious metals around $11 came up. And as gold price started coming, it's on 28. It came back down. 2018, that's where the gold and silver price. Remember, it used to be mainly silver, but now it's gold. But there was also problems with the CRA, Canadian Agency. It's like their form of the IRS. And that was resolved around 2019. And as you can see, 25 goes right up to 53, goes a little bit, but now it's around $61.33. So if you look at it, wheat and precious metals around $12 to 61. That's quite a move. And if you look at it, it has gone sort of up. It's, chopped a little bit like the gold price, But I think the main reason is the cost of these companies are around per ounce of gold 3 to 400, as opposed to the mining where it's like 1,500 now, all in sustaining, and the silver's around $5 or $6. And if you look at some of the other high end ones, meaning the big ones, Royal Gold, right here, let's go to the bottom. And you can tell it went with the price of gold too. 2012, it's at $75, goes all the way down to 36. And 2016, it's at around $84. And then as the price, now sometimes if they get a good deal, but 2020, that's around high of 139, and right now the price is around 144. And they did have some assets come online, and I believe I don't own this one. I own the other wheat and precious metals. Just for all disclosure, I'm not pumping or saying they're a good buy or not. This is just for historical purposes. But even though the stock market was performing well, what I'm wondering is how come these companies were doing well? And I think part of it is it's a good business model. There's a lot of income. Now, I think they would have done better. I think the stock market has taken some away, but I don't think when it comes to markets, there's one reason why things happen. I think there's many reasons. I think the miners losing money, cost, dilution, but I think capital flowing to the stock market also played a role too. So Royal Gold, that has gone up, and that's quite a move. If it's even, let's just, I'll be generous, $46 to 144. Look at it since its inception, 4,000%. Now let's go to Franco, Nevada. It's another one. Why doesn't it just go to all? My computer's being slow, of course. So we're in all now. 2015, it was around $40. It reached at 1.159, but I forget what mine it was, but it was 20% of its revenue. That shut down, and that's why Franco is down here. You have to remember at the end of the day, their stocks, they lose assets, it will hurt them. But Franco Nevada is like the bellwether for the most part. And $40, and it's still going up. And I think the difference between this and miners is these gold related equities had a lot of income. I own this, so, and I own the next two, Cisco Gold Royalties and Triple Flag, just for disclosure. Not a buy or sell recommendation. These are just for historic purposes and just going back. Of course, I have to go back to all, and it's taken forever. Please load. Yeah, I have no idea why the computer's so. I want to watch a little bit of sports, but let's see if triple flag. So yeah, if you look at triple flag, this is at 12.50, $16. It's a 30 or 40% move. 33. So if you look at it, and that doesn't include, this doesn't include dividends. This is just straight up appreciation. So and then if you look at Cisco Gold royalties, it's $11. I bought it around 9 or whatnot, but now it's at 19. This is around 43% move. Oh, it's somewhere in there. I forget my exact cost basis. And yeah, so if you look at it, And I think the difference between this and the miners is clearly there's because of the cost, there's net income. And there's clearly a cost and there's net income. And if you look at it, it's not the miners. Yes, I think the stock market took some money, but it was also they didn't have income, earnings, debt dilution, and combined with the price when it went to 2000 in the year 2020, it didn't stay around there. I think right now, if you look at gold, let's just see if I can share this. Let's just see if I can share it. I think 2500, which I think the price is right now. I'm gonna try, of course, none of these. So yeah, perfect. I can bring up the chart. So if you look at it right here, 2011, but then May 2020, but it came back down to like 1600. It was only there very briefly, but in 2023, around 18, 1700 by its cost. And I think 2200, 2100 because a lot of the costs now it's starting to really generate profit and earnings. And right now the price is 2600. So I do think over the next couple of quarters, even if it stays at this level, I'm not making investment advice prediction. I do think the miners will start doing better, especially the mid-tier ones because generally the most all-in sustaining cost was around 15 to 1800, and that was where the gold price was. So they had to borrow, use a lot of debt, and now that they're making money, just paying down their debt alone, or just making using some of that money to pay down debt, that would reduce their interest costs. So that would not only they're making more revenue and they have a profit, but then using that money to pay down that reduces their interest cost even further going forward. And not only that, if they're buying back shares because they just had to issue so many, the net earnings plus paying down debt and interest will greatly. So I think the miners, as long as gold stays around 23 or 2400 for the next year or two, I think the miners are getting ready for a move again. And that's all I have to say is that when looking at markets, a lot of people like to look for one reason things happen and only one reason. And sometimes it's complicated because, and you always got to check yourself. Like, I don't think the stock market was the only reason miners haven't performed because if stock market and Bitcoin and AI, if that all took money away from gold, then why were the royalty and streaming companies doing so? And that's the question you should ask yourself. And the answer is income and earnings and good. So if the miners start generating income and profits again, which I think they will, I think they'll do well. Not investment advice, just my opinion, commentary. And that's what I encourage you to do. Always check your beliefs because everyone, me included, is wrong 30 or 40% of the time. And so always be aware of that. I'm aware of that, and that's why I always try to change, and that's why I always back it up with data. If you look at my channel, I do cite things or data at least, just so you can understand where I'm coming from. And that's one reason I say investing, involves risk, and I'm not a financial advisor because I don't want you following me. I want you listening to my channel. That would be cool. But always check yourself. Always do it. And I thought the stock market was the sole reason gold wasn't going up, but a lot of times there's always more than one reason. Unless it's a Hawk Tuohy coin, then that was just a pump and dump scheme. So anyway, that's all. Have a good weekend, and I will see you next video.